Most business owners have heard of general liability insurance. Many haven't. But here's what's surprising. Recent industry research shows that a majority of small business owners cannot accurately describe what their general liability policy actually covers. And that gap between thinking you were protected and actually being protected is where the most expensive claims happen. Here's what makes this gap more dangerous in 2026 than it was a few years ago. Liability insurance rates have been climbing, even when property rates started to ease, driven largely by what the industry calls nuclear verdicts, jury awards that have grown far larger and far more frequent than they used to be. The cost of getting this coverage wrong has never been higher. Every business that interacts with customers, clients, vendors, or the public carries third-party liability exposure every single day. A customer on your premises, a vendor at your job site, a product in someone's hands, a social media post about a competitor. Any one of these interactions can generate a claim, and claims don't require fault to be expensive. According to the Hartford, 43% of small business owners are threatened with a lawsuit every year. Roughly 4 out of 10 small businesses will experience a property or general liability claim within a decade. And for most of them, the policy that they have wasn't built to absorb what the claim actually costs. It was built to satisfy a landlord or a contract and nothing more. General liability insurance, sometimes called commercial general liability or CGL, is a foundational liability policy for any business. In plain terms, it protects your business when a third party, someone who doesn't work for you, claims that your operations caused them physical harm, damaged their property, or injured their reputation. It covers 3 primary categories. Bodily injury. Someone is physically hurt as a result of your business operation, a customer falls, a visitor is injured at your job site. Property damage. It's your operations, employees, or work damages someone else's property. A contractor cracks a client floor. A delivery driver dents a parked car. Personal and advertising injury. A business is sued over its content. A competitor claims defamation. A social media post triggers a copyright or slander allegation. And critically, general liability policies covers legal defense costs when the claim has no merit. That matters because roughly 1/3 of all general liability claims result in a lawsuit. And once litigation is involved, the average general liability claim costs over $75,000 to defend and settle. Slip and fall and a customer injury, the most common category, averages around $45,000 each claim. Defense costs alone can reach that level before a case ever goes to trial. Most small business owners carry $1 million per occurrence with a $2 million aggregate, meaning that the policy pays up to $1 million per incident and up to $2 million per policy period. The structures work for a lot of businesses, but for businesses with contracts requiring higher limits, elevated third-party foot traffic, or operations in higher litigation state, those standard limits are increasingly the first place a program falls short. Not because the coverage was wrong, but because the number was never revisited as the business grew. Here is where the understanding gap does the most damage: the exclusions. General liability covers third parties. It does not cover your own employees. If a staff member is injured at work, that's workers' compensation, a completely separate policy. General liability covers accidental property damage to others. It does not cover your own business property, your building, your equipment, your inventory. That requires a commercial property coverage. General liability covers bodily injury and advertising injury claims. It does not cover professional errors or mistakes in your work product, a contractor who builds something incorrectly, a consultant who gives bad advice, a designer who misses a deadline. Those are errors and omission claims covered under a professional liability policy. General liability does not cover auto accidents. Any vehicle used for business purposes needs commercial auto coverage. And general liability does not cover cyber incidences, data breaches, or electronic funds transfer fraud. Cyber liability is a separate and increasingly essential policy. Finally, general liability does not cover intentional acts or contractual assumed liabilities unless specifically endorsed. Consider how this plays out in practice. A customer slips on a wet floor at a retail location, breaks their wrist, and files a premises liability claim. General liability responds, covering the medical bills and legal defense if a lawsuit follows. A contractor accidentally damages the client's finished flooring while completing the job. General liability covers the cost to repair or replace the damaged property. A vendor is injured while visiting a job site. Because they're not an employee, general liability, not workers' comp, is the coverage that responds. A business posts a comparison ad that a competitor claims is defamatory. The advertising injury and provision of a general liability policy covers the legal defense. And here's a scenario. we see far more often as the market tightens. A business with genuinely a good claims history renews its general liability policy expecting a flat premium and instead sees a double-digit increase, not because anything changed about the business, but because the carrier's overall claims severity across the industry went up. Businesses that don't shop their program at renewal are absorbing that increase blindly instead of putting it in front of multiple markets. Now consider the same scenarios with the general liability policy, or with the policy that was written with the wrong classification for the business, and every one of those claims comes directly out of your pocket. We see general liability policies placed incorrectly all the time, even on businesses that think they're covered. Limits set at minimums to satisfy a contract requirement without evaluating whether those limits match the business's actual exposure or the value of a claim in its industry. Incorrect business classifications, which affects both what the policy covers and what it costs. A business classified as one thing that actually does something completely different may find claims denied at the worst possible moment. Missing additional insured endorsements required by most commercial leases, vendor contracts, and client agreements. When a landlord or client requires your policy to cover them and that endorsement isn't there, the certificate of insurance is essentially useless. Exclusions that don't match operations, particularly for contractors where completed operations exposure is a major risk that's sometimes excluded or sub-limited without the business owner's knowledge. Policies renewed on autopilot in a hardening market when casualty rates are moving the way that they are right now. A policy that isn't remarketed at renewal is a policy that's quietly losing value or quietly overpaying, and most business owners never find out which. And policies written purely to satisfy a requirement, purchased without a conversation about how the business actually operates, what contract it signs, or where the real exposure lives. At Cory Washington Co, we treat general liability policies as the foundation of a business insurances program, not just a checkbox. We review how your business actually operates, what your contracts require, what classifications apply, and where claims could realistically come from. Then we structure the policy with the correct limits, the right endorsements, and the carriers that match your actual risk profile. And we remarket the program at renewal so an hardened market works for you, not against you. Because a general liability policy that doesn't reflect how you actually do business isn't protection, it's just plain old paperwork. The right general liability policy should be there when it matters most, not just when someone asks for proof of insurance. If you want to make sure your coverage is actually built for your business, not just placed to satisfy a contract, that's exactly what we do. Link is in the bio. Let's build your program the right way.